Uh, Mr. Jimmy, I really appreciate the last 3 days and that you spend your valuable time, to share with us the EB5 energy program, your operation and the way that we can create a pathway to U.S. citizenship for investor. I really appreciate that. Yeah. So can you share with us, our audience and our investor and our community about your company, your operation, and share with us that information?
Sure.
Yeah. Mm-hmm.
So, Jeremy Paul, CEO, Eagle Natural Resources. Been in business 15 years, been able to basically put together drilling programs, acquire acreage, and developmental, producing properties over that time frame. And then, since we've been in business, we've basically been able to acquire roughly 80,000 acres in 6 different states in the U.S. and heavily focused on horizontal development and hydraulic fracturing into oil, gas, shale plays in the United States. Basically, drilling in those areas has created an opportunity to drill in proven areas, limit the risk that's associated with oil and gas investing, and at the same time, increase reserves and production on a daily basis, tremendously. Some of our wells actually come in between 500 to 3,500 barrels of oil equivalent per day. So over the life of, those projects, they last about 15 to 20 years in production. And, they're basically a bankable asset, right? Because they're a proven reserve. So as opposed to exploratory assets, right, where there's no oil or gas to be proven, if you will, we've been able to go into known homogeneous reservoirs, right, and then extract oil and gas more as a mining play, like exploitation as opposed to exploration. So that's been very good for us. And then, there's a lot of development, obviously, overseas, and, with the war going on currently, oil prices, gas prices, they're volatile. So
right.
More demand and, supply that's needed now, prices should increase as we go over the next 3 to 5 years.
Yeah, absolutely. And what is the geographic area expertise, if you say about, certain area that you'll be operating on? Yeah.
Sure. So we mainly focus currently in Texas, New Mexico, as well as Colorado, Wyoming, and North Dakota, and all rural areas of development. You're not really very close to urban development. It's all kind of, hours away from actual city that is, really populated, right? So you're drilling in rural areas. That allows us to basically go out there, provide the EB5, program, and then somewhat expeditiously provide a visa, right? So once they obtain that visa, that's everything, right? So the opportunity here on EB5 and investing in oil and gas in the United States, not only can you obtain a visa, right, and permanent citizenship through that investment program, but you get to develop energy resources that are greatly needed to alleviate higher oil and gas prices over the long term by developing these types of shale plays in oil and gas.
Absolutely, and that the basic need that we all need right now. And so, with the federal government extended the immigrant investor program, that the bill that passed U.S. Congress and Senate bipartisanship bill, and President signed into law to extend the immigrant investor employment-based visa program all the way until 2027,
right,
and give the incentivize investor to invest into the rural area.
Right.
That's why investor can really expedite and get in the green card. And we do have investor right now from Asia, Vietnam, China, and South Korea that come to the U.S. From the day that they initial apply for the visa to get the approval for the I-526 between 3 to 10 months. It's
Right.
very significant.
Right.
So oil and gas investment is definitely is a good engine vehicle, for that a good pathway for foreign immigrant investor
Indeed.
invest into, right? So that
And then so just, they extended it for 5 years basically. So that's the only
Right.
window that you have is to essentially, invest in that time to obtain a visa unless they're going to extend it. But that creates an opportunity. And, it's more or less, the U.S. allows for 10,000, visas a year through that program. So it's actually a very limited few that are able to participate and then, be able to invest in energy right alongside some of the largest publicly traded and privately held companies you can invest in, drilling the largest horizontal wells onshore, right? So that opportunity is huge, right? And then that's closing the gap. So if they don't extend it, it's not going to be available, right?
Right,
So-
right, absolutely, and right in our community, a market like Texas, California, also Washington State and Nevada, and those a lot of this oil-rich, energy-rich state.
Right.
It's very diverse, and we have a lot of this investor offshore that come into our community and bring in, capital and invest and creating job and creating more opportunity for all of us.
Sure.
Yeah. So, Jimmy, I really appreciate that you taking the time from your super busy schedule, and for the last 3 days and share with us your operation, your expertise, your team, of how you run this great, amazing, operation in energy and oil and gas. And, we here to, sharing this information with our investor and our community in the U.S. and in Asia. For those that already here, that on the different type of visa, student visa, work visa, H-1B visa, that wanted to make the conversion into the permanent investment visa, right? And then for the new law that allow for investors to do that,
Right.
Yeah, so
Instead
that
of just having a work visa,
Right.
You're to be able to work for a company or corporation. Now you can actually obtain citizenship through an EB5 investment program. Right?
Yeah.
So if you're investing in states and if you're investing in a rural area, those are going to be, typically pass through quite a bit faster, right? In some cases.
Yeah, absolutely. And the and so for the investor, overseas, they can apply into this great, fantastic investment business model that they can really expedite to get their green card. So a little bit about us is that I myself came from Vietnam. My father is U.S. Marine in Vietnam before 1975, and we here in Dallas, Texas, and we have over more than 350,000 Vietnamese that migrated to right here in the state of Texas.
Yep.
And we have over 1.1 million in California. And we also have 400,000 people, Vietnamese, that migrate from Vietnam in state of Washington, Pacific Northwest. So this is the effort of continue to providing the pathway for immigrant investors continue to come to our country and contribute, invest, and live a great life over here.
Right.
Yeah, so we apply with the USCIS to get regional center approval in multiple states, and that's we started those works in 2007, and over the decade we helped over 1,100 investors, more than 75% already obtaining IA-29 U.S. citizenship approval. 17 different funds in multiple, but 92% is commercial real estate, and also in some of the energy investment opportunity. But we want to take this opportunity, for you to really share with our investor right now, our broker right now, and our community about this program, right? And so, what we in commercial real estate, what we use EB5 capital that we build veteran housing, right?
Right.
Yeah.
Which is definitely needed, and
Yes.
programs in place for that.
Right.
Benefit from.
Right. The VA voucher is very limited, and the cost of housing it keep rising.
Right.
So it makes it so not affordable for veterans that get in housing right now. And we're using EB5 financing to pay for affordable housing. We really need it right now across our country.
Oh yeah.
The shortage of housing continue to be the issue. We use EB5 financing for senior housing, like a fund in Seattle, where that worked out really good for the senior, not only mainstream American, but immigrant senior that also need the help with the help more right now. And then, in commercial real estate, we're using EB5 financing for student housing. You right now is 32% of people from overseas international students at our major university right now, like Seattle, Washington, any university here in Texas. Most likely it will be 20 to 30% total student is international student.
Wow.
And we do need to have investment vehicle to get permanent green card.
Oh yeah.
Right.
It's definitely.
Yeah. So Mr. Jamie, the reason we do the investment is that the reason we do the investment, a lot of our investors coming from Asia, and Asia is Asia is representing 68% of the total world population right now.
Yeah.
Right. So the United States started the immigration program back in the 18th century when 80% is coming from Europe. But then in our modern immigration time right now, would be 80% would be coming from Asia. Right. That's why you see our community keep growing. It's much more diverse.
The whole reason as to why we do oil and gas, right?
Right.
It's needed. You have over 7 billion people in the world, right? Half of that is just Vietnam, China, right, and pretty close to India, I believe, right? When you merge that together, that's over 3 billion, just that market alone, right? So, America only has 330 million roughly and growing, right? So with the energy consumption that everyone uses across the world, supply demand is going to take a huge, factor into everything that in people's lives. So quality of life, right, is what you're going to want. And then peace of mind and longevity to grow a family, grow a business. And, in today's economy and the world stage, you have a world a reshuffle of the deck of the world allies, world trade.
Right.
So that creates an opportunity, right, and forces some people to actually move out of certain countries because of, the shift, right? So in some cases, this opportunity is probably one of the best opportunities that you're ever going to be able to, get into, see, or be able to develop, right? And then it's attached with an EB5 visa to be having permanent residence at one point after year 2 or 3, basically, I believe it was.
Right.
Right. So that to, certain, individuals or families could be everything. That could mean everything to that family, that business, or, to be able to open up their life and basically continue it in such a way where they probably aren't able to in other places, right?
Yeah, absolutely. And you're right about that. So the population for United States is 340 million, representing about 4.3% of the global population.
Sure.
And the demand, the need for energy is all-time high right now. So everybody would be familiar with and the energy opportunity that be able to invest into your operation in crushing all this great state in Oklahoma, Texas, and also Colorado, and all this state. It's just amazing. And so we wanted to learn much more about this investment opportunity.
Right.
And you took the time to share us about that. The other thing about EB5 program, U.S. government is really every single year, 2,000 visa are reserved for EB5 investment in the rural area. And, when the I-526 is approval, the applicant can schedule the interview with the consulate if they oversee. And if they, we are U.S. consulate in Vietnam, U.S. government building of $1.5 billion, the largest consulate in Hanoi right now in the concept of working together with America. And also if they here in United States, if they here in Austin, Dallas, Houston, you can go to you can pretty much go to immigration and converting your existing visa to the permanent visa and green card. Right. And that's the good thing and about that. So so then the oil and the operation. Could you kind of elaborate, sharing, what project are you working on right now, and why do you think it makes sense, for the investor to get involved with?
Right. So again, obviously we drill in horizontal developments and hydraulic fracturing, and what that's been able to unlock is more reserves that were previously unavailable to produce. Right. Vertical drilling into sandstones, limestones, and onshore and offshore. And then when you started drilling horizontally many years ago, you basically were able to unlock more reserves in a single location.
Right.
So as opposed from a vertical to a horizontal, you're actually getting 4 to 8 times more cumulative production, daily production, than you would on a vertical well. Right. So that's huge. So that cost reduction on having to drill so many other wells vertically, you're actually able to do it horizontally now, and basically just kind of line them up in a row, and they call them drilling pads, right? So let's say you have about a 26 well drilling pad, you're basically drilling in Texas, Wyoming, Colorado, New Mexico, which are probably the best areas of development. Even when oil prices are down, those are the most economic areas to go into for oil and gas drilling. So it creates an opportunity to not only create jobs, right, through a job creation enterprise through EB5, right? But you're able to indirectly and directly for each well drilled create up to 99 jobs.
Wow.
Right. That's through the upstream sector, midstream, and downstream. Upstream being the exploration and production side. Midstream, all your connective infrastructure in place, and then your refineries on the downstream side, which is your end product, your plastics, your gasoline, your jet fuel, all those things separated out. So it creates those types of jobs throughout that whole sector through all three. So what we end up doing is our business plan is to continue to reinvest our profits, our revenues, because every time we put it in, right, it's creating a compound effect, right? By reinvestment. So once you outlay capital into resource plays such as the horizontal wells that we drill, cash flow comes in, you reinvest that cash flow, right? And then it starts a compound effect on your monthly revenue. In this case, in the United States, individual investors get tax deductions as well. So it actually compounds the tax benefits. You keep more of your hard-earned capital. So once you become a citizen, have that reportable income in the United States, you're going to want to offset that tax liability somehow as well, right? So future planning, you want more of what you earned, not have to send it off to the U.S. Treasury once you are a citizen. So that's a huge benefit in the future as well. Now,
absolutely.
The way that we're explaining this is the horizontal drilling programs that we do, when you're able to reinvest that capital and the compound effect on the revenue comes in, that's how oil companies become oil companies. That's why they're able to do the types of exploration that they do, right? And risk more dollars, go and find new reserves or develop more lease acreage, right? Same scenarios, just 150 years ago, all it's done is gotten bigger. So right. And more technology being used. So horizontal technology and hydraulic fracturing has basically gotten to a phase of Gen 1, Gen 2, Gen 3. Now we're at generation 4 and 5, fracking technology going forward. So the discovery of oil and gas reserves is pretty much already laid out on the shale plays that we're in, the oil and gas shale, right? So you actually have to frack those areas for them to be able to produce an economic, matter. So what we've been able to do from that standpoint in our business plan is group operated properties as well as horizontal drilling proven producing properties, and then the drilling, aspect 50-50. So the weighted asset group that we have as a company is actually pretty diverse. We're able to go and be parallel to vertical drilling, horizontal, and then redevelopment of existing reserves that are already producing. So just an idea, for instance, in the last 15 years, 38 million barrels of oil produced out of all of our programs.
Wow.
Right? That's
Great
a lot,
production, yeah.
right?
Mhm.
So it's more than the average. But when
Right.
you're drilling horizontal wells, acquiring producing properties like we've been doing for the last 15 years, you have that ability to scale. And when oil goes down, for instance, everyone's running, they're selling their assets because some areas are just not economic to keep those assets, right? So
Right.
they fire sell.
Right.
So in this case, we've been able to pick up properties for very, very much reduced prices from what the previous companies actually paid to get in, right? So the buy low, sell high still applies, right?
Right.
And then when oil goes up, prices go up, natural gas prices go up, you're going to want to be in the most economic areas where it's the least expensive to drill and produce from, but get more bang for the production, right?
Right.
That's where we're at. So Texas, Colorado, Wyoming, New Mexico, those are the hot areas. And if you look on a heat map, on a signature map, you'll see that all the rigs are in all of those areas developing huge, huge wells, right? And that's what's contributed to the American energy dominance that's been going on.
Absolutely. We appreciate that you sharing that with us. Now, what are some of the technology in the modern time that would help the process better, more efficient?
Sure. So what they've done is, since you have all these other oil and gas areas of development, and you have older fields, what they've implemented is basically CO2 recapture. Right.
Right.
So when you actually have CO2 in an oil and gas well, or you're injecting it in, it creates it stimulates the reservoir. Right. So it's able to produce more oil and gas on a daily rate. Then you take that CO2 right back out. Right. The emissions clause and everything. You get the tax credits if you're producing and doing those types of injections to revamp old oil and gas fields that were previously uneconomic to produce. So now you're having a CO2 injection, and then you have tax credits in the United States to be able to offset the risk basically and increase your production from going into old fields that you would lose money on if you didn't have that ability.
Right. Mm-hmm.
So as like up in Saudi Arabia, those fields are on decline, right?
Right.
So you're going to have to find new ways to basically produce at an economic rate using new technologies like secondary recovery, tertiary recovery. But everything we do is still on its primary recovery phases. We stay within that. We don't really do secondary recovery or tertiary recovery because it's made for someone that really is an operator that wants to go out and essentially produce wells that are 20, 30, 40, 50 years old, right? And don't have the economics in place to be able to go and drill the types of wells we drill, right? So it's not really, it's not a competitive edge that we have. It's just we're able to do business in the right areas. We have the capital to place, right? We do due diligence on all the programs that we offer and are part of.
Right.
And long before we allow anyone else to come on board, we do due diligence, for us. So we know what we're getting into long before we bring anyone else on. So the parallel partnership there is we've done so much due diligence to be able to say, we're going to put our money in and then allow others to at the same time. So that's the key.
Right.
Right.
Yeah, absolutely. So what are your, in terms of due diligence process when you come to, and what I learned from the company have a substantial of inventory of land that can be drilled.
We've got about 80,000 acres.
Right.
In all those states. And we operate just under 700 oil and gas wells. Right.
Right.
And the reserve report that we were doing, we did an in-house one, then we got another third party that's putting on, their blessing. But it's north of 150 million for those assets, just on 33 million in capital raised from one company. And then we also have around 50 to 75 million in asset value through Eagle Natural Resources, which owns, another company called Eagle Energy Partners.
Right.
So you've got those assets basically, and then multiple operating companies that we do business with and then that we own as well. So
Right.
you're still going to be able to do business with the access that we have, which will give you, the Chevrons of the world or the Chevron types on the private side, right? So public, private, the best operators you can drill with. And at the same time, we do operations as well in those areas, right? So you can grow an asset base, kind of like a real estate investment, if you will, right?
Right.
Oil and gas is no different, location, location, location. It's
Right.
the same thing. So if you have a tenant in common property, right, and you have an apartment complex, let's just say those tenants are actually pump jacks,
Right.
right? They're just going up and down. Those are your tenants
Right.
paying you monthly,
Right.
right?
Mhm.
So it's like kind property. It's real property. It's a real asset. So it's very duplicatable amongst real estate investors that can convert into oil and gas, right? Or want to go back into real estate. It's basically the same thing, right? The only difference being is people don't think that you can go out, look, and see, touch, and feel the property, but they can. It's just it's in a more rural area, so you're driving further out. You're not going into the main city, where it's populated and or it's a suburban area. I mean, it's a little different, right?
Yes. Mhm.
But same aspect as real estate, location, location, location. That's what you're pulling out of it. So the tax benefits, right, when you become a U.S. citizen, allow for energy development in the United States, right, based on your tax code, right? So your tax bracket. So you're able to offset that tax liability. So the future earnings of W-2 income, let's say you're, you have an S-1B visa, right? You're out here on a work plan. You want to obtain an EB5, visa to stay here permanently, but you still have the work available, right? You're still making good money. Your family's here. Well, you're going to want to keep more of your hard-earned income now, right? So then you use that to basically offset your oil, your tax liability by investing in oil and gas domestically, because our tax code is going to encourage you to do that, right? So the long-term gist of it is you could build a mini portfolio, right? Mini oil and gas portfolio, and basically retain residual income, reserves, and then these things last 15 to 20 years on the horizontal developments that we do, right? And it's proven. The last 100 wells that we drilled just in the last 5 years, that's 25 million barrels of oil equivalent produced, north of 1.8 billion gross revenue. That's $70 oil.
Right.
Right. Today's at $80, right?
Right.
And rising. So I think the opportunity is huge. I think the EB5 investment program, connecting those dots, you're not only helping America basically produce more, right, and become more energy independent, but you're giving oil and gas, what the world needs, like
Right.
it's more energy, right?
Right.
So, and then you're able to attach, a visa to it, a permanent residence and a permanent, situation to being able to live in a country where,
Right.
You have more freedoms,
Right.
right? Which is huge.
Yeah, which is huge because, oil and gas located in the rural area, and that's what the federal government, USCIS, is incentivize investor right now. So based on the company experience, knowledge, and expertise, in this state, we see, Texas,
Right.
Oklahoma, and also Colorado,
Right.
Wyoming, and also North and South Dakota,
Right.
and if based on the inventory right now with the company, right? What do you think of the production would be per annual
Oh,
at full capacity?
I mean, our wells are producing over 10,000 barrels of oil equivalent per day just now,
Wow.
right?
Mm-hmm.
And the more we drill, each one of those wells, to our interest is currently doing that. And then every well that we've drilled horizontally came in between 500 to 3,500 barrels of oil equivalent per day.
Right.
And then we have the mapped out decline curves. We know
Mhm.
exactly, with an 8 to 9% up or down rate on production, we're able to pinpoint 8 or 9% up or down what that well's going to do, what that production is going to look like. And we're only 8 or 9%, off, up, or down. So that's that rule of thumb right there. You can bank on that. And then the success rate that we've had drilling all those wells, all you have to do is just find the next property, right? So the due diligence, right, is key. So you start with the land,
Right.
right,
Sutherland. Mhm.
right, and make sure that you own the land, right?
Right.
And if there's any issues, title issues. You got to clean all that up. You got to get an attorney. You got to do all that stuff. So we start there always first.
Right.
Before we even say yes to the deal, we always make sure that due diligence is ran and that everything's, on the up and up, right?
Right.
And it's clean, clear title on transfer, right?
Right.
Once you get to that point, you have a geophysicist, right?
Yes.
So our geophysicist, Jeff Sproul, he happened to be an Amoco production, worker, and then BHP, right? And then Apache Corporation. So
right.
Big company, geophysicists.
Those are the leader in the energy
knows how to
industry.
find oil and gas, better than 80% success rate drilling offshore in the Gulf,
Right.
and has discovered 1 trillion cubic feet of natural gas onshore.
Right.
Right. So huge discoveries. But what you do is you take the due diligence, get a geophysicist, right?
Right.
That knows what they're doing, right? And then can find oil and gas, and is not going to completely say, yes, let's do all this exploration, spend all this money, and then hit a dry hole, lose all our money, right?
Right.
That's the total opposite of what we do. We just reconfirm or deny what's there, what isn't.
Right.
Right. And if we can't do that, we don't participate. Right. We will not go and drill that well. We won't operate it. We won't participate with another one. So the key is to define where you're drilling, make sure the economics at today's prices, or even at, if you cut oil and gas prices in half right now, will it be economic to drill that well, produce it, if oil's down or if gas is down?
Right.
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 So before we bring on anybody, we have to make that model work for us, right? As an oil company, before we bring on anybody else to participate with us. So we start there, start land, geophysics and subsurface data, piece that together, right? And then the thumbprint that we have from the field, if we're able to do due diligence on across, let's say 100 to 400 wells in the area, get that data and find out where we're going to be on the finance side and the economics once we deploy the capital, right? And then it's all about drilling schedules. How fast is it going to get drilled? How fast is it going to produce? What's my, time value of money? How long am I holding it for?
Right.
Right? A lot of the times we're able to get in, drill it, test it, complete it within a month to 3 months.
Right.
And then the cash flow starts. And then you're talking about a well that will last 10, 15, 20 years after that.
Right.
Monthly revenue, nonstop.
Right.
That's the beauty of oil and gas.
Yeah. So the investor, the limited partnership, not only invest into a very good organization, experience, strong track record, but also the business itself is very high demanding and very profitable. On top of the green card U.S. citizenship that investor gonna get. So
huge job creation through investment in a job creation entity, right? Enterprise. So company like us, we can scale up, we can scale down if we need to.
Right.
What we do is we go and scale wherever we want to go and deploy the most capital. Right. And we're going to go and take over that area and basically stamp on it and say, this is all Eagles, right? Right. And make sure no one comes in. So we drill out everything that we can and then move on to the next play if we want to. Right. Across Texas, New Mexico, Colorado, Wyoming. We've got assets in Oklahoma. North Dakota, we've hit 1,000+ barrel a day wells. Texas, we've hit 3,500 barrel a day wells horizontally. West Texas, Wyoming, we hit 2 wells that produced 7,800 barrels of oil equivalent combined, all natural gas. Huge. And then you have an opportunity, right, to basically invest in resources in the volatile markets, right, of natural gas now. So in the United States, you have a $1 to $2 an MCF is what it's trading for. So what's happening is the infrastructure that's in place now isn't able to keep production up and then basically sell it. Right. They have to create more infrastructure, more pipelines, so they can offload the production. Right. And supply demand. So you have a lot of supply, but you can't produce it all. You have to curtail it because prices are down. Right. So what you're creating is an opportunity of skyrocketing natural gas prices, and that are going to be very volatile. Price swings are going to go up and down. That opportunity to someone that's just buying natural gas properties alone could see a 10x in a year. Right. So when it goes to $1 MCF to $8 an MCF, I mean, people are going to be asking, why is their electricity high? Well, wouldn't you want to own natural gas production and offset that? Right. Absolutely. So I definitely agree. And for now, so
so you and JCE Job Creation Enterprise, in the system that providing this great opportunity that allow for immigrant investor to get involved in the program so that they can, because the geographic location that operated in the rural area, so investor will get green card visa approval for them and their family very quick amount of time.
And these
right?
jobs are needed across,
Right.
not just, the upstream market, midstream and downstream too. So you have families that are waiting to get in, that have all the experience, 20, 30 years of experience doing what we're talking about, drilling wells, land work, roustabout work, being on the rig all day long, right, for days on end, and then switching off, and then they don't find work in certain areas. They have to move because the areas that are underdeveloped now, it wasn't in Texas, New Mexico. Let's say you worked in West Virginia. Well, West Virginia, there's not much going on in West Virginia now, right?
Right.
They have natural gas reserves, huge, but oil and natural gas and condensate, those are all the jobs are moving to. It's not always going to be in just one state. So you have to move. You have to find, areas of development that you can go and move into so you can get a job. So that job creation is greatly needed, right? So basically bridging the gap from capital to job creation in this sector, all it's going to do is basically benefit the entire sector.
Yes.
And families, and you're going to help them grow as well.
Right. Yeah, absolutely. So we very fortunate to have such a great operator company with the expertise, knowledge, experience, and a lot incredible inventory of land that drill into energy, oil and gas, for the next 3 to 5 years, until the program set to expire in 2027. Right. So I know that for investor right now, whether domestic in the United States, that currently holding different type of visa, working for Apple, Microsoft, Amazon, or Boeing, I wanted to convert into permanent visa, and for international students who don't have the permanent residency yet, this is opportunity, and then also for foreigner, of course, like a lot of people that we work with, in Asia, right, that wanted to wish to get involved with a great company, have the security, have a peace of mind, have the green card, and and then get the pathway to United States,
which is everything.
Right, which is everything.
That is everything, right? So that peace of mind right there, that security, that allows people to literally, say, wow, right? If you're in another country right now and you want to attain the American dream, it's now within reach, right? And then you're grouping it with the JCE and a business plan on a loan structure, right?
Right.
That basically facilitates our business plan,
right,
and the payment and the service of that debt back, right? And then some.
Right.
And it's a bankable asset. So every time you look at this, and our numbers, just over the last 100 wells, every time you look at it, it pays the service debt, it pays the, the return on the capital, and then they're able to go and not only get the capital back in a certain period of time, but you're talking about 1, 2, 3 years, and then up to 5 years, you're looking at a 3, 5, 700%, gain in some instances off of these types of wells.
Right.
So on a loan, scenario, you're able to service that debt easily, and then grow a company that will be here for generations to come. So they're helping us, right, build our business that we're adamant about, and at the same time gaining, citizenship, which they greatly need, they want, right? They have now more opportunities to do business across the globe, and then have their families planted into the United States, where the American dream is now obtainable and in sight, right, and reachable. So
yeah,
beautiful thing.
No, that's I agree. It's a great thing, and so based based on your inventory of land, based on your operation and finance, what would be the production goal in the next 3 to 5 years for Eagle Oil and Gas
Right.
what that production look like in terms of volume.
Volume. Oh, so
Then from there we can
let's look at it
create.
this way.
Right. Mhm.
Let's take it a step back, right? $100 million
Right.
drilling these wells
Right.
that we drill, and the
Right.
access that we have to
Right.
being able to have that acreage,
Mhm.
have that opportunity,
Right.
and then drill those types of wells that produce 500 to 3,500 barrels a day.
Right.
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 You look at this business plan in 3 to 5 years
Right.
on a reserve analysis off of $100 million investment,
Right.
north of $1 billion.
Wow.
That's
And
how powerful that is.
and then when we know that
You could literally 10x
Right.
this business plan
Right.
through reinvestment just in the first, 2
Yeah.
to 3, 4 years, and have a reserve valuation on top of that of north of $1 billion.
mhm,
Now, that's the key, right? That's
Right.
how oil companies become oil companies. They develop their resources, they reinvest, they get a compound effect, and they use that money to go and buy more acreage, buy more drilling locations, right? So they have more drilling room, more upside to grow, right?
right.
Because if you're in one area and you can only drill so many wells in that one area, you're done, right?
Right.
Well, so the upside is going to be you have now levels of participation across the United States in major basins where it's economic, when
Right.
oil and gas prices go down to
Right.
produce from, which is everything, right?
Right.
So when oil companies want to go and succeed,
Right.
not go out of business, right?
Right.
They're going to want to know where to go.
Right.
Some companies, let's say around 80, 90% of them, they don't know what they're doing, right? So the big boys do, the big companies, and then some of them have geologists that couldn't find oil if they were standing in it. That's the difference right there. Is a hired gun versus someone that knows how to put in sweat equity and take an override royalty interest or royalty interest on discovering oil and gas first, because they love finding oil and gas, right? And then taking all the risk away thereafter, as opposed to just hiring somebody, right? So our geophysicist works that way. He's not going to be here just getting collected checks, I
Right.
did my job, right? Now I can go home,
Right.
and all that. No, he's going to do the data, the
Mhm.
geoscience, and find out exactly how close is it going to be to when oil and gas come out of the ground. How close are we to our numbers and our projections? And we're only 8 or 9% up or down.
Wow.
That's how crazy that
Right.
is. So that opportunity does not exist with other oil and gas companies unless you're a major oil
Right.
company, right?
Mhm. Yeah.
And publicly traded, and a Chevron and EOG Resources, Exxon,
Right.
right? So that data, and then they'll go and explore, right, those companies, but they'll spend more money to do that. But when you find a resource play to develop, you're going to find out exactly how much it costs to drill that well, how much it's going to be to put it in production, and what your production is going to look like. And that's going to be mapped out before it's ever drilled.
Wow. Right. Well, you are the JCE entity, job creation enterprise, and based on what you share with us about your production and the volume, and of course, this is a very profitable model.
We're drilling
that
70 horizontal wells right now.
right.
Right
Mhm.
now. And then, we got about 48 of them going into production. We've already hit the other ones and they're already producing. So I think we got 2 more getting drilled out, but from drilling, testing, completion, we got 71 wells
Wow.
right now
Mhm.
as we speak. These wells are $10 to $15 million a well,
Right.
right?
Mhm.
So production, 500 to 3,500 barrels a day, depending on the location, whether you're Texas, New Mexico, Colorado, or Wyoming, right? So Colorado, we've been hitting 800, 1,200 barrel a day wells. The average, is around 500, 600, 700 on an annual basis. So we start from 500 to go to 3,500. Those are the types of wells we drill. And that's how much they usually cost is, 8, 10, 12, $15 million. But you're drilling 2-mile laterals. So you're going vertical, right? And then going horizontal, right? So you got vertical 10,000, 11,000 feet,
Right.
and then another 12,000 horizontal, basically. So
Wow.
it's huge.
Yeah. No, it's huge. And, we heard about your reputation in the industry and operating oil and gas, in the last, especially last 2 decades, it's challenging, especially, a year during and after COVID, the challenging that we've been through.
Yeah.
So the question is that you wanted to, the question here is, how do you deal with the challenge and you facing, and what set you apart from the rest of the competitor
Well, just
in the marketplace?
let's go to COVID, right?
Right.
Negative $36
Right.
a barrel
Right.
for a month or two.
Right.
People were running,
Right.
away from oil and gas.
Right.
Right. They're saying, how did it go negative? Right. Before that, we had a glut of oil. We had oversupply.
Right.
So now you have a negative
Right.
of what you're selling it for. You owe money if you sell it.
Right.
So
Yes.
everybody, they either produced more and waited for prices to come back up,
Right.
right?
Right.
Or they just stopped all production altogether.
Right.
And then when it came back up, you had a bottleneck of production in West Texas, right?
Right.
So you had purchasers couldn't get to the oil fast enough.
Right.
So it was just sitting there. And
Right.
they had to sell it at a discount even then, right?
Yes.
So you had maybe 6 months, 7 months of this, and West Texas prices are at, let's say, $30, $40 a barrel. It's trading at $60 everywhere else
Right.
because you don't have enough people going and picking it up and selling it, right?
Right.
They're backlogged. So once that bottleneck was done, you saw prices go back to the normalcy, which is closer to the WTI, what West Texas Intermediate was trading at. A lot of people don't know this, but the Texas Railroad Commission, back 100 plus years ago, managed the oil and gas prices. Okay,
Yes.
so the Texas Railroad Commission started and managed the price of oil for the entire world.
Right.
Right.
Yes.
So what's happened since then is other markets have come on. Right.
Right.
You have different types of oil and gas across the globe.
Right.
And different prices
Right.
because of it. Right. It's all taking a benchmark. You got Brent crude, you got WTI, you got
Right.
Murban crude, and you got some emerging, others as well. But ultimately, you either get a price that's above what WTI benchmarks trading at.
Right.
If you're getting above, that means it's good oil, right?
Right.
Right. So it's less refined.
Right.
You don't have to refine as much to get more for your oil and gas, right? So Louisiana has that, right?
Right.
Parts of Texas, Wyoming, Colorado. So what you're doing is you're able to basically diversify across certain areas where the price and the benchmark is going to be very close to what it's trading at and what you're selling it for,
Right.
right? So the opportunity is going to be finding the most resources that you can drill at a responsible, area, right? Rural area, right? So getting the oil and gas out of the ground economically, is going to be everything. So the ones that are going to stay in existence, the companies that are going to be there when oil goes down, let's say in the future for negative $37 a barrel, which will probably never happen again in our lifetime, right? Who knows, right?
Yeah.
Or who knows, like could go up, could go down. But creates a huge opportunity for everyone selling their assets, right? So whether you're at $80 a barrel or negative $36, $37 a barrel, the market is even better when it's down because everyone runs, right, from that scene.
Right.
Who's going in and buying those companies out? We are. Companies like Eagle. That's how we were able to go and basically quadruple our asset base overnight,
Right.
right? It's companies like that. So you can't be afraid of the market, right? Whether it's up or down or just stagnant. You have to know it and you have to be able to play it the right way. Just like Warren Buffett says, you can't get emotional about a stock, right?
Right.
Yeah. What are you gonna do? Sit there, stare at it all day, and do I sell it now, or I sold it at a loss because it's trailing down? Well, how long are you holding it for? Why don't you look at other opportunities, right? So it's all about weighing your losses, your profits, and your risk factors. But if you know something to be true, price is going to go back up, people are going to need oil and gas, it's not going to stay down forever, right? So the opportunity to buy at a low like that hasn't been seen in my lifetime except one time.
Yeah. Wow. Well, Jimmy, what a treat to to introduce you, to a lot of investors who wish to get in the green card U.S. citizenship and investment into the job creation and the enterprise that located in the rural area that comply with all the requirements from USCIS to get the priority processing for the green card. And then learning about your operation, how great this operation is and the business plan for the next 3 to 5 years. Of course, it's very, very productive.
Oh, yeah.
Yeah. And so we're looking to get a lot of investor, a lot of our affiliate, partner, broker, and investor to get involved in this great program. And with a very limited spot that available, for those who wish, to get great profit, great investment, and be able to get involved in our program.
Right.
So I would like to know if you be able to take your time and also educate a lot of our investors through
that's
Zoom
totally,
to know more about the operation
Yeah,
and what
do
you
that.
do in the net 10, 12 months or so.
Oh yeah, the opportunity is
Mhm.
through gaining more knowledge.
Right.
Once you understand it,
Right.
it's 10 times easier to actually see yourself doing it
Right.
even more. And that's just from one investment, or if you're doing 10, you still have a learning process,
Right.
but you're making money through the way
Right.
that we do it.
Right.
It's from the beginning because of the wells we drill. So the risk is basically ameliorated to some degree.
Right.
And then you're not hitting 30 to 50 to 1 returns. Don't get me
Mhm.
wrong, right?
Mhm.
In oil and gas, because you're not drilling those exploratory wells and then finding and discovering new fields. You're going into known areas of development that are proven productive that will pay out, right? And then have an actual stream of 10, 15, 20 years of revenue, right?
Yeah.
So, I mean, you have that ability here with Eagle to invest in, and then at the same time, encouraging, the EB5 investment program to be able to gain that citizenship that those individuals and families
Yeah.
need, right?
Yeah. Not
So-
not everything.
That's all. That's
Yeah.
that to me and what we do in oil and gas, that is a huge benefit on both sides,
Yeah.
and it makes for a win-win partnership.
Yeah, Mr. Jamie, I totally agree with you. One of the refugee came from Vietnam. My dad is with U.S. Marine for 18 years, and we came to Seattle, Washington, just like a lot of community here in the Great Texas. And we learn and grow, and this has been an amazing country. And next year 2020, next year 2025, we'll have the event that since 50 years the fall of Saigon, and that we all gonna go to that ceremony right here at the Bush Library, and yeah, so there's a couple of things that I learned at you go from the quote that I want to leave with everybody is the more you learn, the more you earn. Learning is equal.
Knowledge is power.
Right.
Yeah.
So you taking the time from your super tight, busy schedule and teaching us and share with us your knowledge, your expertise, about this amazing investment opportunity. We have nothing, but we really appreciate and would thank you in advance for that. Just like you taught me so many great things in the last 3 days right here at your headquarters office. And so I definitely that a lot of us are involved in investing in the program right now, whether it's a broker, whether an LP, whether an investor who want to make profit, make money, also get in U.S. citizenship, that through the JCE, Job Creation Enterprise, they in this journey and it absolutely a treat, right?
Yeah.
So 31 years ago when I came to Seattle as a boy, I grew up as a man. I met a guy named Bill Gates. He founded the Microsoft in Seattle, and he's been one of the richest men in the planet.
Right.
And then after that, of course, like another guy in Seattle founding the Amazon, which is Jeff Bezos, right? So Bill say, when asked about, what make him the richest guy, right, on the planet, and he say, I just happen to be at the right place at the right time. Location.
Yeah.
So the time is definitely is now, because federal government, USCIS, have already reauthorized the employment-based category number 5 visa program for the next 5 years.
Right.
And also in the bill that's also authorized for job creation enterprise that located in the rural area, and government incentivize quick expedite processing for the investor that invest in the rural area, right? So you can get what you want, we see the American dream. and then and that open up, that the key open up for the net level
That's
quality
just
of
the
life.
EB5 side.
Right.
You translate that to the opportunity that we have in our business plan of what we do.
Yeah.
Obviously, it's
Which is
rough-
local investor, right? Yeah. Mhm.
So here's the last decade.
Right.
I'll leave you with this. Last decade, oil and gas prices have been suppressed. They've been down.
Right.
Right.
Hmm.
So if you look at history of oil and gas prices just over the last 20 years, and you look at the last decade in terms of what we're doing now, you need $90 to $150 a barrel to run social programs in other countries, Russia, right, Middle
Right.
East, right?
Right.
So what is oil at today? It's at 80,
Right.
and we're at war. Well, it's been, oil's been trading at $25 to $60 a barrel for almost a decade straight, right?
Mhm.
So how do you combat that? Losing money,
Right.
not being able to pay your government social programs that you have in place,
Right. Hmm.
You have to diversify outside oil and gas when prices are down. So those governments did, right? And what ended up happening is you still need $90 to $150 a barrel. And that's what the world doesn't completely understand, including the United States.
Right.
They're guilty
Right.
of this too. Now, if you actually have oil prices at $100 to $150 a barrel, you think we're still going to be at war? Or do you think that the war would have kicked off maybe if it was just higher priced oil? Because they needed to pay their social programs. If they didn't have that, the last decade, and we've been asking like Russia to go to war, right? And then we don't pick up the phone sometimes, right? It happens, right? Missed a phone call, whatever. Bottom line is that spread of $90 to $150 a barrel is real for everyone else across the globe, right? And when your GDP, your gross domestic product, is going to be a majority of oil and gas production, and you're selling it for a discounted rate for years and years and years, you can't pay your social program. What do you think's going to happen?
So talking about that, what would be the break-even price per barrel for the JCE to break even, and then the profit?
$25 to $35 a barrel.
Wow.
In all the basins that we're in, right?
Mm-hmm.
And some areas are more costly.
Right.
So you got to be careful of where you're putting your money.
Right.
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 So we stay within the $25 to $35 barrel mark on the break-even price and only invest in those basins.
Right.
Right.
Mm-hmm.
Now, overseas, right, you have to have those social programs paid for. You're going to have to diversify out. You're going to have to, find more opportunities to grow your GDP, to be able to pay and make more capital or do more business. So you have BRICS nations formed.
Right.
Right.
Yeah.
You have Brazil, Russia, India, China, South Africa, right? So now what BRICS is doing is once you lean off the petrodollar,
right,
and do business amongst yourselves, right, in those countries, that's fine, right? But what it does is it starts to take away, the currency of what it's trading at and the value,
right,
right? Because you're no longer trading that dollar, right?
Right.
So what is going to happen? Inflation, right? Hyperinflation, right? So oil at $80 a barrel right now, probably be producing and selling for $120 a barrel.
Wow.
So politics, has basically kept it down in the United States. We've come off of our strategic petroleum reserve. Now they're making calls to basically refill it, right? So the great opportunity here is to literally produce oil and gas domestically here in the United States so that we can become more energy independent to actually combat future price, spikes of oil and gas. That is what's needed. And you have to find a price per barrel that the entire world can actually deal with and actually turn a profit on. Because you do have that energy consumption, you do have emerging markets, you do have population that's growing, right? So that need alone is why people do oil and gas. Not for the tax benefits, not for the visas, but because we have to. Right?
Yeah. Mm-hmm.
Have to.
Yeah. So I really, we spent the last 3 days to learn in depth about your company, and based on our information that provided and what we've been through, from operation standpoint, for productivity standpoint to management, and this is truly a great JCE, and so I'm pretty sure that the investor gonna have a chance to be able to learn more about your business plan in the next 3 to 4 years,
Right.
right? And get
all about
a
growth.
kick out of it,
It's all about
right?
growth. And Eagle,
Right.
every time we do business with others,
Uh-huh.
Eagle is not just an oil company, right?
Right.
We're a business partner,
Right.
okay? So every time you do business with us, we're open to doing entrepreneurial things as well, as far as business
Right.
goes, and,
Mhm.
and personal development and growing that,
Right. Right.
You know, networking. You know, if you grow, I grow, we grow together, right? So it's always imperative to build, you know, to want to build one another and to help, you know, inspire others and
Mhm.
contribute to that, right?
Right.
So I'd rather be the conduit to someone else getting exactly what they want in a healthy way and growing their portfolio with us at the same time, you know, contributing to something that we all need.
Right. Right.
I think that's more imperative. That's what we do.
Yeah, that's awesome. That's great. Well, thank you so much for, taking your time and share with us about this investment model.
Pleasure.
And we know that, a lot of us are gonna want to jump in and learn much more about this business plan from the great JCE job creation enterprise that will be provided.
Yeah.
And, as I mentioned, being an immigrant like myself, the one thing I know is that I learned that from Brian Tracy early in the days that the more you learn, the more you earn.
Yeah.
So we all learn this business plan and get involved with this company, right? And with that, I really, again, thank you for taking the time.
No
It's
problem.
great, and we're looking forward to learn a lot more.
Yep.
Yeah,
I'm looking forward to it. It's a pleasure, and I appreciate you having us.
thank you, Mr. Jamie.
Pleasure.
Okay.